Every trader has a plan until they get slapped with 5 losses. They keep trading, they keep taking losses, they keep blowing accounts, but they start to notice things, and they start to notice that, okay, I took a loss here when I did that. I'm going to try stop doing that. Even though that maybe is part of the plan, they stop doing the things they should be doing. They start chasing a trade, they start hedging in the wrong way, they start re-entering, and it plays out. So then they take that recent outcome and they build faith in that. And then you start to build an edge around something that doesn't work. What is the difference between a trader and a gambler? It's hard to say. If you ask 100 traders, they'll give some reasoning, but you can always debunk that reasoning. They'll say, oh, but I have a strategy. So does a gambler. Traders have reckless emotional behavior. So do gamblers. Gamblers high, gamblers fallacy, confirmational bias, recency bias. All of these things are in both gamblers and traders. So if you want to define what is the difference between a gambler and a professional trader, there's nothing unique in the information you have, but how you build it together as a system is what counts. Where I can take great concepts and blow accounts consistently because I just piece it together in the wrong way. And I can take a very simple strategy. Let me just buy every London Open when it's a bullish trend in a M15 demand. And if I manage it in specific criteria, with specific risk management, profit-taking systems, all of these things, you can have an edge with simple confluences. And that's the difference between people that know things and people that make money. It's how you put it together.
5 years ago, you say you would not be able to do the same performance or same resilience or same ease that you are trading with now. What do you think contributed to that in the last 5 years? Because even then you had several years of market experience. What happened in the last sprint that gave you that extra edge?
Yeah, good question. So,
well, ladies and gentlemen, welcome back. And you are right once again. I am not Waqar. He's sat opposite me. Welcome, bro. Good to have you once again on your show.
We're here, bro, out in Bali.
Oh yeah, we had a beautiful day today in Bali, bro. We rented this beautiful villa, and throughout the day today, I saw something very interesting. You, throughout the whole day, was predicting price action. You were reading price action and calling every specific movement. Although you did not really decide to enter the market until one specific opportunity lined up with your specific line of confluences. Can you please elaborate more on how were you able to accurately call the market, but still only trade it once?
Yeah, I think for everyone to understand, it's a clear definition between what is an analyst and what is a trader. And I think that line gets blurred a lot, which is why most traders struggle. But I think the analyst side is someone that can just call the market, has ideas, and they do analysis. But a trader is someone that can execute with conviction, backed by data. And today there was a very specific daily cycle variance that is a very common one, in fact one of my preferred ones, and it was simply bullish market structure on M15. So that point of interest was qualified in the way that I qualify points of interest, by the duration of the points of interest, by the depth of the retracement, by having an inducement and leading to a higher high. It had all of those, and it had a few levels in between. So I saw Asia low as liquidity. I saw a smart money zone, which was obviously going to be a trap, and then the actual preferred area that I wanted. So I just mapped it out that usually Frankfurt goes for the Asia low sweep, invites the smart money traders of those equal low sweep, comes to that smart money trap zone, gives a bounce. So I knew that bounce would go up, and then eventually in London Open, wipe through that, and then come to my demand area. That demand area was looking for a rejection. I was live streaming the whole thing. I vlogged it as well with the trip going on. So that was a very well documented idea that I had, but I didn't sell along the way thinking that was going to happen. Number one, because, and I would have made money, let's say, because that's exactly what happened, but it's not worthwhile to enter these positions because it's very hard to manage it. And I'm a firm believer that precision in the market brings you so much relief. Because if you have a sharp entry, it's very easy to manage that trade. It's very easy to break even. And it's very easy to then actually put your stop loss, have your risk reward controlled. But if I entered in the middle of Asia range, stop loss above a POI, risk reward therefore being diminished, and then if it's chopping around, it's just not how I want to be trading. So it did exactly that. And then when it came to my preferred buy area, it didn't align. It didn't give the trifecta that I need. The trinity of confluences that I think makes every strategy better. That is time, that is inducements, and that is lower time frame confirmation. So I had the point of interest that I wanted. It arrived a bit out of my London Open window. It didn't give the lower time frame confirmation, but it did give the inducements. So I had one of the three things that are essential for me. So I walked away from the trade, and the price went high and did exactly what I wanted, but we were not able to capitalize. And then later on, during the New York session, I did another stream, a live stream trading, and New York session sells presented after sweeping highs, coming to a supply zone, giving the trifecta in my time window with an inducement, lower time frame confirmation. And that initial trade hit the 1 to 3 risk reward that I always partial at. I locked in 1.5% gain, live on stream with many people joining me on that, and then took that profit, put it into EU cells because it aligned with the same move just a little bit after. And that also did the 1 to 3 risk reward. I lock in 50%, 1.5% gain. So between those two positions, 3% gain today. But that's just typical day. And I think whilst we're on the road, which we have done a lot. How many flights have you done this year?
I don't know, around 30. Yourself as
Yeah,
well, man.
30,
Maybe even more.
yeah, 30 to 40 flights every 2 weeks, pretty much.
That's
If you average it
crazy,
out,
man. Yeah.
every few weeks. And we've done a few tours together. We've done the US tour, which was a few weeks. You're in Dubai very often helping out. Now we're in Bali for a specific project, which we can speak about. But yeah, there's a big project we're doing and challenging ourselves with the documentary that we have coming up. And I think it's always important to be aware that we're always growing, and the event is about leverage and how to unlock wealth creation. And I think we're living proof of that, in the sense of I retired at graduation, as did you.
Oh, yeah.
We both went through our 6 years of university, both graduated as doctors, and you hung up and I hung up my handpiece and everything, and you hung up the lab coats, and we retired on graduation to pursue this. And I didn't want to just be a full-time trader and just say, okay, I'm going to only trade and do nothing else, because traders they are approaching life with a less trodden path, so usually a bit more entrepreneurial and want to take on more on their plates. And even a day just like today, or this week, let's say, we've been non-stop. We woke up normal 8 9 a.m. and now it's like 1:30 a.m. when we're shooting a podcast. No one's forcing us, but we've been like active like this.
Yeah.
And if I look back at the last few months since the US trip, then I've spoken on stage in Madrid, then we've had the summit, then I've spoken on stage there, then we had a booth, then we've done, like, in the last 3 weeks 16 pods. I've been live trading last month on live streams. I did 8 or 9%. Trading, building, growing, podcasts, running around everywhere, flying around Bali now for a week. It's intense, but I don't know about you, but that's what I enjoy.
That's
working
life,
hard.
man. That's life. And if I didn't enjoy myself, we wouldn't be on the same boat together. And I think that's what unites us, and that's what gives us
So what
motivation.
keeps you pushing hard? Because for myself, it's, I think maybe how I'm wired. It's just nothing's forcing me now. It's not a financial push only. It's also like I don't know what else I'll do. If we're in Bali right now, I don't think I'd want to go to a waterfall and spend the day out there. I'd rather be in beautiful villas with great company and building meaningful things. What about you?
Yeah, man, it's an interesting question. I think, firstly, everyone is ambitious to obviously improve and to make money and to get better at what they do. But then you reach a specific threshold, and then you decide, and you notice that you can just be so much better as an individual. All of your previous goals are now bad days, and you realize the only potential and the only limit to your actual achievement is just your limit that you put up on yourself. And
how have you found just traveling this year? Obviously, you're from Egypt, so you have the country around you, the people around you, and certain beliefs that they may hold, the culture that they have, hometown mentality. Now that you've traveled the world, we've been so many countries together. Has that broadened anything for you, the traveling experience?
Yeah, I think it's the limiting beliefs most importantly. It's the 4-minute mile story all over again. It's simply because something is deemed impossible until it's done, and then you just stop believing that you can't do it anymore, and then you just try harder and try more and seek more guidance and commit just a bit more. And then once that's broken, it becomes the new bad day, or the new standard at least. And then you look for the next 4-minute mile, and then the next. And then with traveling, I think it's my favorite way of breaking that. It's the easiest way, the most efficient way. You just see more people, and by default, just by numbers, you will see more people breaking things you never thought was possible. Oh shit, you're making X per month, or you are doing this for a living, or you're doing that, or we have this high of a skill set. For example, like what we're doing here with this cinematic production that we've been up-leveling, I'm sure someone out there is doing, I mean, we know people out there are doing like 10 times the value and the effort into what they're doing. And then they probably see others doing 10 times to them. It's just, it just keeps going. Yeah. Even in our religion, it's always mentioned that we're always layers upon layers of excellence in every field as well, not just in matters of this world, but also matters of religion. And it's just an ever-ending journey upwards. That's the whole point.
Yeah, I think it's something I've said a lot on the pod, and that's why I wanted to ask the question of, I've always said that the environment counts so much, and I think until you experience it, it's hard to understand or conceptualize it. But I think for me, it's been a bit of a shake or wake-up call that this year I've spoken to 50 to 100 people that are doing at least 100 to 500k a month and above. So if I'm constantly in that environment, constantly having these conversations on and off camera, living in Dubai and seeing the wealth that is out there, when you go down to our garage or the basement in our building, you see like $20 million of cars just within the eye line. Like it's just Rolls Royce, Ferrari, Lambo. Like there's so much wealth out there, and then you see the number plates, and there's $1 million number plate, and you see the levels that there are. And what I understood is, when I speak to all these people when I was younger, I thought they must be so smart, they must be so hardworking, they must be gifted in some way, but every single one of the people that I've met that are doing amazing things, they're just regular people, absolutely regular people that just work a bit harder, work with a bit more intensity, and gave it time, gave it a decade or so. So it's been an interesting paradigm shift for me, and I'm glad to experience that with you as we travel, and whilst we pursue our own goals together, we also get to see all of the people that we interact with, and constantly asking them, what's working for you, how's it working for you, and building the network out and future projects to come. I want to take a moment from the episode to remind you of Alpha Capital, a long-term sponsor of the show, a leading prop firm in the entire industry, and in the last year they did over $50 million in payouts. That's why they are a top-ranked prop firm that's been around for years and is not going anywhere. And with the multiple step plans they have and the multiple packages that they have, there is going to be something catered specifically to your needs at the most competitive pricing. And because we have a long-term relationship with them, we are able to bring you a massive discount of 20% off all evaluations. So click the link in the description or use the code TOT to get 20% off all your funded accounts. Working with the best prop firm in the industry, Alpha Capital.
You know what I love? I love how it's what you compare yourself to and who you compare yourself to, and that perceived deprivation is what motivates you, because you feel that gap that you need now to fill. And these people, for example, or like the more you advance, the more you see that gap, and then you want to fill the next one and the next one. It's never ending, and I find it very, very fulfilling.
I think it's also interesting to note that as you grow through life, my initial perception was, I can't wait to just get, say, 5K a month, 10K a month, and a salary milestone. But when you do start to achieve those milestones, it's not like everything is just disposable income. And maybe it can be for some, but it shouldn't. And if you have a pursuit of a greater goal, you'll realize that all of this cash flow, when you have it, you realize how little it is. When I used to think 10K a month is like absolute financial freedom, and a 500K a year would be like set for life kind of thing. And as I started to knock these goals off, I started to reinvest more and started to do bigger projects and bigger investments and bigger passive income, and everything just gets bigger, and you realize there's just levels upon levels. And for me, I realized income is an irrelevant thing, because you're exchanging your time for money, and therefore it's not about what you have in your bank account or what's coming in this month or what you could spend but rather save. Because what I realized as I got older was, it's not about what I have right now, because it never brought me peace. If I had a big month, if I have a lot in savings, let's say, it never actually brought me peace. And what I realized was, it was because of just rate of replenishment. That if I didn't have confidence that I could do it again and continually have the same level of income, I would be scared to spend it. I would be scared to invest it, because I want to hold on to it, because I've never had it before, and it's a big number, and who knows what life will have, and all these natural concerns. So then when I started to focus on reinvesting correctly, deploying capital leverage, then I knew that I can get income without having to put my time and dedicate. Like right now, we are non-stop. We've been going for 1 year straight without a break, pretty much, and it's with absolute intensity, and we're going to do this for a long time, but probably can't do it at this rate forever, or in the way that we're doing it forever. And the only way you can get peace with that is that that the money's coming in now, and we're achieving things now, but what if we can't work at that rate anymore? What if something changes in our lives? And I think it's very important to consider rate of replenishment, and therefore you have to invest bigger. You have to build multiple paths for yourself and grow, which is why trading is an initial goal, but it's unlocking a paradigm where trading brings you one specific path in life, and that's to bring cash flow. It's a very specific endeavor. You're not bringing value to the world. You're not bringing value to anyone. It's just simply a skill set to get money. That's the only objective, and that's the only benefit out of it. But then when you get that money, you start to realize, okay, this is not a lifestyle thing, because you can actually deploy that money and then gain the other forms of leverage in life. And I think for me, then when I started to do that, it went from 5K a month, 10K a month, to then 10K in payroll, 50K in payroll, and then just the trips we've done is 6 figures plus, just on projects. And then the January project that we have with all of these new cinema cameras and everything that we're doing, new team members, new hires, growing again. I want to keep putting myself in positions where I'm like, this is scary, but that's building, and I think every startup had that. And when we study wealth creation, we look at the richest people around us. We have to understand leverage intimately, because Elon Musk has 24 hours in a day. So does a engineer. Engineer might make 50K a year. Elon Musk is worth 400 billion. There has to be more to it. A crack in the code, let's say.
Yeah, just for those wondering, in case I can't clear this up nicely, this is Lovely rain and lovely
That's the
Bali.
rainy season in Bali.
Yeah,
Wow.
yeah. I think we just arrived at them.
We'll carry on, huh? This is why it's not a full studio podcast. It's a boys
Oh
chilling
yes, yes.
at 2 a.m. podcast.
Oh yeah, yeah. But yeah, please continue. You were speaking about an engineer and Elon Musk having the same amount of hours per day.
Yeah, so let's get into leverage then. The topic of leverage. I didn't think I'll take it here, but you have to understand wealth creation is a process, and you have to do it in stages, and there is a roadmap. And the roadmap for wealth creation previously, our parents' generation, was simply education, which is why you ended up a doctor, why I ended up a doctor, because it was the best method for them. But the world has changed, and for my parents, when they were an immigrant family from Pakistan to the UK, the priority there was just, okay, a stable income, a high income, a respected income, and a career that has longevity. That is just ultimate security, safety. But it's also, I like to say in this day and age, the biggest addiction you can have is a paycheck. It's a salary, because you are so fixated on that you have too much opportunity cost to walk away and take a risk. Whereas those that are more on the struggling side, their backs against the wall, they don't have to risk too much, they can go all in. But the salary is what keeps people in that golden handcuff. And I recognize that a decade ago now, and I was like, okay, a job is great, it's stability, it's a backup plan, but it is a golden handcuff. And then when I started to understand leverage, I realized, well, there is 5 forms of leverage. I can't access all of them, but the richest people in the world, they use all 5. Let's use Elon Musk as an example. He's not bought Twitter because he so proudly believes in free speech. That was a good portion of it, but he had a huge hand in swinging the election for his personal gain, most likely. He knows the power of a personal brand. He knows the power of a platform. When he goes on Joe Rogan and does that, the stock price goes down. And when you compare Tesla's valuation compared to every single automotive, Mercedes, everything, Tesla's valuation is astronomical, and it's a heavy reason for that is this personal brand, his presence. So you can see he's leveraging capital. He's got his investments for sure. He's got his personal branding as a form of leverage. Hence Tesla's valuation. Whenever he starts a company, when he wants to raise money, Cybertruck, he got the money in through the deposits before he even considered building them. That's because of a personal brand. So there's leverage in capital, leverage in personal brand. Then there was his labor. I, in a week, can maybe put in 100 hours of work, pushing it 120. But if I have a team of 50, or if I have a team of 100, or if you're like Elon Musk, he has 150,000 employees, he gets millions and millions and millions of hours per week. He could do nothing and the business will operate. That's a huge form of leverage. And there's others. There's tech, there's the markets and so forth. But not every single one of them is accessible to a beginner. 10 years ago, I couldn't access a team. I couldn't access tech. I couldn't access capital. So all I was left with is the markets. And even Elon Musk, with the meme coins, with Dogecoin, with Bitcoin plays that he's done, he's leveraging the markets. And the biggest players are. So I think when you want to create wealth creation, you have to reach that kind of escape velocity. You have to kind of break out, because there are a lot of pulling forces, because the previous route is just get a job. Now, get a job worked. When you had a high paying salary, it was a great way to achieve financial freedom. Why? Because you could save up and get a house. You could get a mortgage. But now with the price of houses increasing, the cost of living increasing, but salaries barely moving, with the buying power of the money going down so significantly because of inflation, where the complete dollar supply, 40% of the dollar supply was printed in the space of a year and a half. That's massive inflation. That was exported across the world because of the petrodollar. So the US doesn't have to feel it, but the world feels it. And I mean, the history of money is insane, but when you realize that the world has changed now and you can't save your way to wealth anymore, a high income job doesn't do it anymore, you have to realize that you have to follow wealth creation methods. And the best way to access that is the markets. It's still my main source of income even a decade later, and I funnel all of that to investments to gain leverages. It's not just to have passive income and gain rent. That's a portion of a plan. But the roadmap is just you have to get all 5 forms of leverage in your life. And when you have all 5 forms of leverage, you eventually get that peace, because you know that if you stop one of them, the other 4 forms of leverage are bringing you wealth. And then that replenishment is what counts. How fast can you replenish the income that you have? Not how much income you have in your bank accounts, because once it's spent, it's gone. But you can spend freely, you can spend big, you can spend big investment, big projects like we're doing, because of the rate of replenishment. As that gets higher, you can back yourself more and more in projects, and that's why the team is growing. That's what everything we're doing is growing. The media side that we've got right now, it started off just me and you. Now it's a whole organization, and it's only going to grow. And in every department in our organizations, it's the same. It's doubling, tripling in the last year. And that's all because the approach that I have, because I could very easily right now just say, trading is good, let me use that. Let me buy a couple more watches and live life in Dubai. But I think it's about extreme obsession, working with intensity, and when you're working with curiosity, it's just a lot of fun. I love it every single day because I'm doing it with great people around me, with support around me, and anything I don't want to do, team is there for me, and we just build cool things, man. There's nothing better, I think, as a man than doing meaningful work with people you care about and building cool shit. And that's my right now. That's my life. So
Yeah.
I'm loving it, and I'm glad we get to share all these things together. You get to be on the road with me. We do all the fun things together. And I don't know if you remember, last time I was in Bali. Do you remember what I shared with you?
You were in a 12-bedroom villa all by yourself with the helipad, and like you had like 9 staff and just one person in the whole villa. What was that
it's
about,
also
man?
because how prices are here. But the only time this year I took an actual break.
Yeah.
Because I just felt like I was going non-stop, and I thought, let me just stop working. And there's a few reflections there. When I did stop working, I forced myself to just not use my phone, not look at the charts, not do anything. First time this year, and I noticed I usually go to bed at 2-3 a.m. My mind is just awake. I'm not a morning person, I'm a night person. No matter how many hours of sleep I've had, no matter the caffeine level, my mind is just alert at midnight. It just has ideas, gets creative, and I want to do something at midnight, but at midday it's not the same. And for the first time when I was on that retreat, when I wasn't with my phone, when I wasn't speaking to the team, my mind was still, and I went to sleep every single day at 9 p.m. and woke up at 8 a.m., which never happens. So I think part of everything we do for me is, like, say, a mental toll, which I don't feel it. I'm not like I'm stressed or anxious or sad or anything. It's taxing. And I think when you have people around you can do it with, it's a lot of momentum we gain on these trips where we're together with the team that we have, and we're growing together, and we're pushing each other, we're bonding, we're reinforcing the vision and bouncing ideas off each other. And I think that unity is stronger than anything you can do alone. And that trip, I remember telling you, like, look, bro, this is sick. I've got 12 staff and 12 bedrooms and all this crazy stuff, because I wanted to be alone and retreat. I thought, why not, let's do something cool, and not even for content or anything. But I remember sending you a voice, and I'm like, but this will be so much better with the boys.
With the boys,
This would be so much better if I could bring you guys, my brother. And 6 months later, here we go.
Yeah.
So I think that's also a part of it, is as you grow, you don't want to grow alone, because you can't. Like, there's no way to build an empire alone, because no one that built an empire did it alone. And not only does your success as a unit compound off each other, greater than the sum of the individual parts, you enjoy the process, you get a lot more fulfillment, and eventually it doesn't feel like work. I don't need a vacation, because, bro, this is our life. This is a vacation. So as a trader, it's very simple. You have to find an edge, and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data, and TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your back testing tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting it on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need, the correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it, and probably you'll be using it for years to come. Wealth creation is fun, man.
Yeah, man, it's amazing. It's like the Hormozi model of do cool shit and then speak about doing cool shit. That's kind of what's to it. And obviously it's a bonus if you can now share that cool shit with people you care about, with your boys, with your family. That's really what a man is here to do, more or less. You've mentioned a few things there that I would love to touch on. So the markets is the most accessible form of leverage, you can say, in terms of someone who is looking to access leverage and walk away from the golden prison and the golden handcuffs, whether it's a doctor or even someone's just starting out. Just finished high school, I'm looking to university. I can see that roadmap from now. I want to have something that I can plant some seeds in, and the markets is the one you deem most accessible. How do you get started, and how do you know it's for you? Because I'm pretty sure everyone in the world, if they started trading, not everyone will see success. So how can someone actually see trading and be like, yes, this is for me?
Yeah, so off the back of what we just spoke about, new environments, my brother, he's here, Zahib, and he's 18. He's about to go to university to do medicine, just like we did.
Yeah.
We got our doctor's degree. He's about to go on that journey. But I wanted him to understand that there's a lot more you can do in life. Get your degree. It's a good thing, and apart from the degree, the stability and the backup plan and everything that wonderful that it can hold, it's also the man you become after 5 years of grueling exams, the ability to work hard, meet deadlines, and like that shaped me. Even though I don't use any of the information from my degree, it builds character. So I think that's useful. But I brought him to Dubai before he starts university. He's been with us for a month. And I just wanted him to just experience all the people I speak to, see what they're doing at a young age, see the environment, the vibration I move at. You guys probably realize I'm an intense person. Like we don't hang around and just sit on the sunbeds for 6 hours. Like we wake up and like, okay, let's get active. What are we doing today? How are we doing? And we just go. And maybe that's not for everyone, but I wanted him to feel that fast pace because I want him to feel that momentum going into it. But I've never pushed him towards trading, and neither any of my brothers. Because although I think it's a wonderful opportunity, you need to have internal drive, an internal temperament, because it's something for me that is a curiosity-driven thing. I wanted to solve the puzzle. I enjoyed it, and I found passion. And passion, the definition of it is not just you're born with it. It's not God-given. You build that passion, and that's through positive feedback. As you make progress, you start to enjoy, you get a bit of dopamine, then you do a bit more, you work a bit harder, and you keep going at it, and then you slowly develop a skill, and then develops a passion. But I wanted him to just have ideas, and when I look around, there's plenty of things a young man can do. He's off exploring his curiosity, and I'm going to encourage him to explore whatever he chooses. But I know it's important to build core skills, so there is the element of building core skills. But when it comes to the market, let's compare the big names or the big opportunities that exist right now. Drop shipping, Amazon FBA, social media marketing agency, or an agency service delivery of any form, high ticket closing, sales, appointment setting. There's plenty of wealth editing. There's plenty of wealth generation methods or online money making schemes, and they're all great. They all work. Not a single one of them is a scam. But I just look at like, would I rather run flat, downhill, or uphill? And all of them have their pros and cons. And trading, I think, is the most well-rounded opportunity, because when I look at trading, you don't need a boss. You don't need to land a client. You don't need an ad budget. There's no such thing as competition. If I started an email marketing agency and 1,000 people or 10,000 people started an email marketing agency, we're all DMing the same people. We're all doing the same prospecting. The competition will hurt me. I still have to land a client. No matter how fabulous my systems are, no matter how skilled I am, I still have to sell and close a client and keep the clients and make them an ROI. And the clients you're going to have are going to be entrepreneurs who know what they're doing. So as a beginner, it's very hard to then convince an entrepreneur who's maybe making money, 10, 20, 50K a month, been doing that for years, that you're a newbie and you want to help them out. It's not easy. The drop shippings, you need an ad budget, a media buyer or SMM agency. You got to land clients. You need to hire people. All of these wealth creation methods have their flaws, but trading right now is the best because it's easy to get started. You just got to build a skill set, which is a specific journey, but you can earn money within a year, I'd say. Earn a bit of money and then consistent money after 2-3 years. But within that time, with the scale you can access with prop firms, there's nothing like it. And trading went from a game of you grow through returns, hence meme coins and NFTs and people flipping accounts and all that crazy stuff. But when you look around, what does a Warren Buffett do? A Ray Dalio, a hedge fund, a bank, all these institutions, the S&P is 10% on average. Property appreciation or rental yield 6-7%. Top hedge funds performance 30, 40, 50%. So how can someone expect to do thousands of percents on a meme coin or in trading? It's not the approach. The approach is maximize capital and go for small consistent gains. Looking at my performance over 2024 with the live call-outs that I did, the public signals, or the live streaming that I've done with the members, where I can't hide in either of these domains, the live call-outs or live on a stream, that performance is just over 50% for the year, just under 60. And I think that's great. And I think anybody should be happy with that. Forget the 20-30% a month. It doesn't matter. If you can do 50% a year and have $1 million in funding, $5 million in funding, it's life-changing money. You just need to have consistent ways to pull small amounts of profit from the market with smaller amounts of risk. That's the game. And it doesn't matter our competition. There's no boss. There's no employees. There's no systems. Entrepreneurship is hard. You need to have sales, leadership, management, so many other things. But in trading, it's great for a beginner to get started. It's just you can't trip up too early, and traders give up and leave the industry not because they run out of money. If a trader is truly committed, they get another job, they save up, they bounce back. But traders that fail and give up after 5 years or 10 years is because they give up hope. and they give up hope because they just take the wrong path. They fall for the signal service scammers, they fall for the gurus, they fall for all of the nonsense. But you can save yourself a lot of headache by just finding a good mentor, following his plan, following his mental frameworks, and save yourself 10 years of trauma. And the shorter your time horizon towards actually achieving something, the adherence to it, the longevity of it, therefore, is a lot larger. So there is caveats to it. I'm not saying trading is a get rich quick scheme, but I think it's the best opportunity, the best form of leverage, a form of leverage that even the wealthiest people on earth are still using. And the key here is it's beginner friendly, because you can get started with pretty much nothing and use prop firms, and it can unlock every other form of wealth management, wealth creation, which is all the 5 leverages that we have. And once you start to unlock that, that is so much of a better path towards tackling life and freedom, overall freedom, peace, taking care of the people around you. That's the only way. The new age 2025 is that. It's not getting a high paying job anymore, because if it was, I would have stayed that way, and you probably would have too.
It's very interesting, man. I think trading, maybe you can also correct me if you disagree, but it could be the hardest way to make easy money. It's starts off strong, and then it just becomes parabolic. And
it's really, really hard, and then it gets pretty easy. And
you just show up and do the same
intensity
thing
that we're working at this week, let's say, but I still rock up, trade, and do a live stream, and still make money. But it didn't require much mental resource. It's not like I was stressed or had to apply my mind or really think or get creative. It didn't require much. I was sat there on the sofa whilst you guys were setting up all the cameras. I'm live streaming, and it reaches a point bro, I've been doing it for almost a decade, so it reaches a point where you're following a system. When you have a system, you know your protocols, you know your entry requirements. It's simply a binary. Does this fit my plan? With a degree of subjectivity which is required, to be honest, which comes from experience and trade models. But then it's just following the plan, and it's not really taxing in that way. You just gotta show up every day, be monitoring the charts, and when an opportunity presents, take it. And 5 years ago, I would never have been able to call my trades live on Twitter in front of the public consistently and go through losing periods and keep doing it. 5 years ago, I definitely couldn't have live streamed my trades in front of people. But as time, you build that resilience, that muscle of applying yourself to the market, and it just gets easier and easier. So that's why it's leverage. It's the same inputs, the same trades,
just more
but
output.
greater outputs with less mental resource, because I can do it more calmly, with less emotion, with less conscious thinking, and I can get greater and greater returns by just scaling up capital and scaling up my experience.
I would love to touch on that point. So 5 years ago, you say you would not be able to do the same performance or same resilience or same ease that you are trading with now in terms of live streaming or even gain on a yearly basis. What do you think contributed to that in the last 5 years? Because even then, you will still have had several years of market experience.
Yeah.
What happened in the last sprint that gave you that extra edge?
Yeah, good question. So I'm a firm believer in practice over theory. And I've had so many mentors. I've bought so many courses. I've found all the Telegram leaks of courses and YouTube videos, and I've studied everything because, like you, I have an academic background. I have a scientific mind. So what got me through life was at school, university, was just study hard, memorize the textbook, learn as much as possible, learn from multiple resources, and be a sponge. That was the way I passed exams and got successful in my earlier days. So that's how I approach trading. Learn as much as possible. Learn from every resource, from YouTube videos, podcasts, textbooks, courses, everything. And that sponge mentality, I realized it doesn't serve you in the markets. More information does not equal better trader. So you have to rewire it and say, okay, is more information going to serve me? No. So that means relevant information is going to serve me. And then when I started to pivot towards that, I started to collect relevant information, but you have to decipher what is relevant. And to decipher what's relevant is you got to apply and test. So you need to have a good scientific process or a testing process in the market. So I chose this confluence, this reason. Should I trade at 9 a.m. or 2 p.m.? What is more optimal? You split test it and you change no other variable, only that variable, and see what effect it has. And then you see, was it positive? Was it statistical significance? Yes or no? And then you say, okay, I'm going to keep this. Then you add something else. Testing process again. It fails, okay, take it away. But you test in back testing, then you test in live stress testing, and then you deploy it over time. So it's a longer process. So I think number one was compounding of all of that, of all of the systems I was testing, and then certain bigger systems that I built in the last few years, in the last 2-3 years, which really compounded my results. For example, understanding profit-taking systems, which I've spoken about a lot. That was a huge needle mover for me with low effort. I kept the same edge, kept the same trades, managed my trades in a data-driven way, my yield went up significantly without having to change too much. And I think just the combination of showing up every day at the markets for years and years and years, there's no replica for that. You can't fake that, and there's no substitute for that, which is why I truly believe you got to do theory, you got to learn things, and you got to leave the classroom ASAP. Just like if I wanted to learn a language, if I wanted to learn Japanese today, if I threw myself into Japan right now, I would not be able to, because I don't even know a single word. So I need to learn some basic grammar, some vocabulary, and then go out and practice, because I can only learn so much in a classroom. But when I go out to Japan and then I practice the language, I can see the phrases, the nuance, the slang, the tonality, the accent. In practice, you learn so much more than just the textbook would have. The same applies in the markets or in sports. You can only learn about so much about how to throw a ball into a hoop until you actually go and throw it 100 times. And the markets is no different. So for me, my biggest breakthroughs are in the latest years, but that's how leverage works, and that's how knowledge and the skill set works. It's never linear. Everything in life should be and can be exponential, and if you don't know how, you need to get to know how to do that ASAP, because things compound on top of each other, especially when you have synergies. I finally have a special offer to share with all of you from the US, or my futures traders, which is over 20% of the listeners of the show. And that is Alpha Futures, a leading futures prop firm that is working with Trader8 and NinjaTrader that are compliant with CME regulations. With the largest end of day balance drawdown in the industry, a 90% profit split and same day payout. And with the most competitive pricing in the industry, with accounts starting at just $79. On top of that, just by being a viewer of the show, you get up to 40% off all evaluations. So why not get started with an evaluation right away, trading $50,000, $100,000, and you already know the power of prop firms and larger capital. So go ahead and use the link in the description or code TOT for the best prices in the industry, plus the best discounts in the industry, to make this a home run offer if you are a futures trader.
There's a concept that I enjoy from the school of thought of shamanism, and it's, does it grow corn? When you're approached by lots of concepts, information, and theories. Theories are fun, information is fun, but does it grow corn? If I plant it, will I reap rewards? Does it yield beneficial reward that then can actually reward me, or has any benefit of me? How can you differentiate between things that grow and do not grow corn? How can you eliminate most of that weed out of that?
Yeah, and I think to understand, I know through my years of studying pretty much every school of thought in trading, and I use 2% of it. And the rest of that knowledge is dormant. I know it, and maybe I can see, okay, liquidity is going to be here because those type of traders usually enter there. So it serves me to an extent. But I think growing corn is, let's say, knowing what is an appropriate vehicle. That Warren Buffett saying of what vehicle you're in counts more than how hard you roll.
Yes.
You got to choose the right criteria, the right confluences, and that Trinity trifecta thing I speak about. You can add that into any system on earth, and I guarantee it will improve that system. Whether you're a Fibonacci trader, a trend trader, a market structure, ICT, indicator, whatever strategy you have, if you add that Trinity, I'm 100% confident it will improve that system, no doubt. So when you build a system around primary drivers, specifically things that are causing the market to move, you always have a better edge, and then you got to build systems around that. But I think that's that 80-20 of does it grow corn? You got to look at correlation versus causation. And if you're approaching the market from correlation, you're always one step up behind, and you don't really have a convincing edge. And the way I like to look at it is comparing an individual, a trader, to a gambler. And when we say what is the difference between a trader and a gambler, it's hard to say. Like if you ask 100 traders, they'll give some reasoning, but you could always debunk that reasoning. They'll say, oh, but I have a strategy. Okay, so does a gambler. They have a poker strategy. They spin the roulette wheel and they pick odd numbers. They pick their birthdays. Like, strategy is just a plan. And people usually go to gamblers have a plan. Traders have reckless emotional behavior, so do gamblers. Gamblers high, gamblers fallacy, confirmational bias, recency bias. All of these things are in both gamblers and traders. So if you want to define what is the difference between a gambler and a professional trader, you don't compare yourself to a gambler. You compare yourself to the casino. And the casino is able to, it's a multi-billion dollar industry. They make money year on year, no matter if it's a booming economy or a recession. If it's COVID and there's no tourists, no matter what, they make money year on year, consistently at a stable amount. Usually about 4% of their total throughput is their profit. How are they able to do that? It's because they don't approach a trading opportunity, a gambler's opportunity, probability. They don't approach probability with so much concern for each trade, for each moment. If on the floor of the casino, if there's a bad day on the books, they don't care. If they have one gambler that's crushing it, they don't care because they know there's another bad gambler that'll offset it.
Yeah.
They play on probabilities. And you have to think, if there's random outcomes in the markets, because the market for most is just random. You can't predict, you can't know what's going to happen for sure. So with random outcomes, how can you have consistent outcomes? That's what you got to figure out as a trader. And that's what's going to differentiate you from a trader versus, or a gambler versus a professional trader. And it's positioning yourself like the casino. In the casino, what do? They have a built-in system. They have a built-in edge, and they just allow time to play, probability to play. They know that if on a roulette wheel, it's not 50-50. There's black, there's red, and there's 2 green. So the stats don't become 50-50. It's like 4% for the casino and then 48-48. So that small 4% difference is their edge. And no matter if you have a bad day, a bad week, a bad month, over time, their edge is proven and it will be there. And you just got to allow probability to play out. You got to allow time, breathing room for your edge to play out. And once you have a proven edge as a trader, that's all you're doing. You're playing like the house, and the house always wins. And if you have a system, you will always win. And then no matter what, as long as you can detach yourself like the casino detaches themselves from a particular outcome, why would you care of a particular outcome if you know in your lifetime you're going to take 10,000 trades? Why do you care about today's loss so much? Because you know there's another trade tomorrow, and then another trade next year, and another trade in 10 years. A single trade is very insignificant, which is why I can be so nonchalant now and live stream and publicly call out trades, because I know it's just another trade and I know I'll bounce back. I know I'll have losing trades. It's a guarantee I'll have losing trades. It's a guarantee I'll have 3 losses in a row at some point. There's a guarantee I'll have 5 wins in a row at some point. These are all factored in. The key here is being detached from outcome and having a longevity mindset like a casino. And when you think like a casino and no longer like a gambler, that's when you enter that profitable professional realm.
Yeah, I think the casinos definitely know how to grow corn. Once they find their own thing, they just keep running it until the numbers pool into their favor. One of my favorite things about trading, much like other careers, they require a high amount of decisions made per minute. Think of a doctor or think of a surgeon, think of a lot of careers. They just require the person doing the execution to do many small minor decisions on an even per second basis, which makes it very difficult to teach without you doing the thing yourself for an extended amount of time. How do you suggest people acquire that instinct, let's say, for the markets, or discretion, subjectivity? Because there's no such thing as a perfectly mechanical, systematized trading plan. If there was, then there would be a bot doing it. Everyone would have it, and everyone would make money. Yeah,
I think there's a bridge here, and that bridge is every trader has a plan. And it's like that Mike Tyson thing, right? Everyone has a plan until they get punched in the face. Every trader has a plan until they get slapped with 5 losses. And then what do? They try to notice patterns. And the patterns you can notice as a human is only recent patterns you had, because your brain can only recognize and store so much things. So what a trader will start to do is then go from a backtesting edge that they've planned and studied and created through months and years of backtesting, and then they realize it doesn't work on a short term. So that's another discussion, but they realize it doesn't work. So what do they go ahead and do? They keep trading, they keep taking losses, they keep blowing accounts, but they start to notice things, and they start to notice that, okay, I took a loss here when I did that. I'm going to try stop doing that. Even though that maybe is part of the plan, they stop doing the things they should be doing. Or they start doing bad habits. They start chasing a trade. They start hedging in the wrong way. They start counter trend trading. They start re-entering. They start doing all these things that were not part of the edge. And it plays out. Because even chasing a trade, even taking a counter trend trade, on occasions will win, will have a positive outcome. So then they take that recent outcome and they build faith in that. And that's called recency bias. For example, if I see the roulette wheel and it spins 5 times and all 5 times it landed on red, I'm like, oh, this table is hot. This table only lands on red. That's just a statistical anomaly that happens. But you build a recency bias on something that is flawed, and you keep repeating that. And then you start to build an edge around something that doesn't work. And that's the problem. But if you keep doing that, meaning you keep having that immersion therapy, you keep showing up, but instead of having recency bias of a month, think about 2 years. Then you'll start to build a lot more of a stronger muscle towards being in tune with the market. That's why I say forget trying to trade 10, 20 currency pairs or gold or stock market and crypto market and the forex market and commodities and precious metals. You have your eyes all over the place. I trade only 2 things for a reason. And when I tell people to start trading, or how they should start trading, trade just EU. Just trade one thing. because you want to build that recency bias to expertise, to experience. And that transition, that's the bridge. You start off landing in the hole of recency bias, confirmational bias, and struggling. And that's why everyone blames everything on psychology. You fix your psychology, you get out of the recency bias, and leapfrog or stepstone towards experience. And there's no difference. You keep showing up to the market, you keep noticing patterns, you just do it with a bit more of a system and a plan. And the heavens are opening up. Wow.
It's crazy. It really is.
That's what I'd say is like there's no way to cheat market experience and immersion. Just immersing yourself in price action of one currency pair for an extended period of time, and just notice and note down things and journal and test. And you keep doing that for years and years, you will have breakthroughs better than any mentorship, better than any course, better than any YouTube video. Learn from the markets and learn from yourself, the voices you have, and build. It's a self-endeavor.
Would you say people discover themselves as they start to advance in their journey in trading?
I missed that completely.
Really?
That is so loud. I was like, wow.
Oh, wow.
Hopefully the camera can pick up how intense this rain is.
It's a part of the experience, man. It's a part of the experience.
Yeah, bro. Wow.
You visit Bali in the rainy season, you get rain.
We could have been in the studio in Dubai, but here's the experience.
We like a challenge, yeah? Just on hard mode. I was asking, do you reckon people discover themselves as a byproduct of their journey in trading?
Yeah, I think the man I was when I started trading in my early 20s to the man I am now is day and night apart. And it's not because of trading alone. It's because trading knocked a domino, and then the domino effect of everything else that happens after that is how I grew up and matured. And I think traders need to embrace the whole journey. And you know how they say enjoy the journey. I look back at the hard days and I appreciate them. I enjoy them. And in fact, I long for them sometimes. Like, those were the good days, man. Life was easier back then. Life was different back then. And nostalgia, let's say. So I think enjoying that journey is the fun. Like I was saying now, like I could just chill right now and not do anything, but I'm working harder than ever, harder than I was when I started out trading, because I have a lot more risk, a lot more responsibility, and a lot more things going on. Back then I just had to figure out my back testing for the weekend. Now I've got to manage a team and payroll and build and travel and logistics and trade, and it's a lot more. But you build that muscle, and you know that typical Hormozy thing of people ask for traits, but they don't like how you get them. Like if I want to be someone like I am today, which is a high stress tolerance, I wasn't born with it. I didn't go to therapy to get it. I just went through a lot of hardship to then adopt a trait. I went through stressful times to have a high stress tolerance. I went through a lot of anxiety to then be stoic. I went through a lot of sacrifice to then be having an ability to take risks. Like all of these things are all of the traits I wanted are on the other side of going through hardship and immersing myself in that trait. So I think trading is going to embody that and personify a lot of emotions and really help you build a lot of those traits, because as a trader, it's not just the act of trading, it's all the emotions encompassing it that you're constantly dealing with. And then do that for half a decade, do that for a decade, you become a way better person. You become a well-rounded person, your mind opens up, your beliefs around the world change, and then you want to attack life in a completely different way, which is why when I look at myself compared to my classmates from my university days, it was a bit like this at the beginning. We were splitting a little bit when I was graduating. Like I was going a bit this way, they were going a bit that way. But now, like 4 or 5 years later, since graduation, it's night and day. Like I've gone all the way over here because of just compounding of ideas, limiting beliefs, opportunities, conversations. They all build upon each other, and I think that's the power of life. And when you look at the most successful people on earth, did Jeff Bezos know he was going to revolutionize the world and e-commerce? Did Mark Zuckerberg know when he was 19 that he was going to revolutionize how humans communicate? No, they didn't. But they just showed up consistently, followed their curiosity, and attacked it with longevity and intensity. And I think you apply that in any domain, in any industry, and you keep doing that, you can actually yourself change the world in your own way. And I think that's a wonderful, meaningful life.
How did you overcome the phase where you were apart from your uni mates or high school mates or people in your hometown, but still not fully towards the people you would have loved to be with or be like or be associated with?
Yeah. It's an interesting question, man. Like, to be honest, I have so many people I know. My network is huge, but my friendship circle is very small. And I do envy certain people who have a large group of friends, like a close group of boys that they've known for like 20 years. I don't have that anymore. I've had great friendships for 5 years, and then I left school, and then I had amazing friendships at university, and then I left university, and then I had great friendships in Spain, and then I left Spain, then new great friendships in Dubai, and I just came to realize it's seasons of life, and maybe it's part of the sacrifice of the path that I'm taking, because the alternative is I can be kushti and have the same friends for 2 decades and do the same things that we've always been doing and the same trips and everything's nostalgic and happy, but I also realized that's an ordinary life, and if I want an abnormal life, I have to do abnormal things, and some of that is not as glamorous. Like, you have to let people go, and it's not like a sad thing. Like, you have to conversation and say, hey, look, you're pulling me down, bro. It's just you just gravitate away. You magnetize yourself towards more people that are more like-minded on your new vision, on your new goal and new path, and you slowly distance. It's not an aggressive thing, but it used to be sad, to be honest. Like, certain people from my university days, bro, we went through so much hardship at university. It's so many exam periods, so many stressful times, so many times we're covering each other's backs. Like, true brotherhood, true friendship. We lived together. We grew up together in our early 20s. Like, that's a real strong friendship. But I'm close with all of them. I still communicate, and they're in my life. But it's not like I chat to them every day and we go on trips and all of that. And initially I was like, man, when I first graduated, I can't lose these people. Like, these are my friends, and you have that attachment. And I started to realize, well, is friendship with people a sacrifice I want to give up for the goals that I have? Like, am I willing to give up the big goals that I have, or am I willing to give up friendships? And it's a hard choice, and each person has their answer. And depending what you want out of life, some people are more towards growth, excellence, mastery, wealth, status, all power, all of these things. And other people are just temperaments, naturally inclined towards more family, love, relationships, and that's fine, because in a society we can't all be wired the same. Not everyone in a society can be an alpha, because if everyone's an alpha, it's clashes. It's not a social species anymore. Naturally, as a social species, you have leaders and followers. You have risk takers and risk averse. You have people that are night people to stay guard, and you have people that wake up in the morning to this is how society is modulated. So I realized that I can't it's not my responsibility. And I gave all my friends opportunities. I tried to bring up my friends, and certain friends followed. Other friends, like, they're happy doing their own thing, and it's not my job to like encourage people to take my path. Like, I have no right to do that. But when I followed my path, which is a bit more lonely, it becomes less lonely when you meet people just like yourself, and then you build strong friendships and strong brotherhoods with those people because you have an aligned vision. And I think that's a gap for a lot of traders, where you start off and you're trading alone, and no one in your high school or university is trading. No one in your hometown is trading. So you feel lonely and alone. And now that's the worst period, because your friends are naturally going to say, hey man, let's come out, let's do something, you change, like how you used to be. And when you have these comments, and I had that, and when I used to hear whispers of, oh, you hear Waqar's trying to be that trader, or he's trying this trading thing, like, that hurts. At the beginning it hurts, like, it's gossip, and also when you have no results, it's just like, you can't say anything back. Like, yeah, I'm actually losing money. Like, I'm not going to say that. So when you're in that period of, you're isolating yourself, you're putting in sacrifice, you're doing the hard work, you're working with intensity, your friends are distancing, your family maybe doesn't understand you, and you have no results, that's the hardest period. And what happens to most traders there? You retreat back to your comfort zone. You go back to your friends, you go back to your old life, you work less intently, and eventually that dream fizzles out. And I think every great trader or every great entrepreneur has to go through that lonely window where you have to kind of distance yourself away from your old friends to unlock the sacrifices to actually pursue your goals, and go through a lonely period before you find your new tribe. And when you find your new tribe, then it's a lot easier. Then it's like, bro, that's how we are now. We're rocking as a group, we're growing together, we're building together, and it's the funnest thing. And there's no holding back. So I think it's just, you got to get through that lonely period and build from there. But it's a common trait. It's a common story that every trader has, and emerging yourself out of that. When I've had all the conversations on the podcast, every trader went through these mini journeys that I'm explaining. So for an upcomer, be prepared for that ride. So the crypto bull market is well upon us, and with opportunities left, right and center, why not utilize other people's money instead of your hard-earned money? So introducing to you the world's first crypto prop firm, Bitfunded. And they've partnered up with an exchange to bring not only the world's first crypto prop firm, but actually a prop firm that has an exchange-like environment. Imagine as if you're trading on Binance. With all the benefits that prop firms bring, with the leverage you can have, or hundreds of thousands of dollars in buying power, utilizing other people's money, so your total risk is just a couple $100 max or as cheap as $79. And with the special offer that they have going on right now for you as a Titans of Tomorrow viewer, if you buy 2 prop firm accounts, you'll get a third one for free. So click the link below this video to head over to the Bitfunded website and start to utilize other people's money to benefit from the crypto markets whilst minimizing your downside.
For each person who went through that journey, I imagine trading was a significant part of that journey, but it's also not the final destination. It's only a part of that journey. It's not the entire journey. What do you reckon is the most important steps to also consider after trading? So yes, trading provides leverage, but it's also what you do with that leverage. You can have leverage and you can mess yourself up even more because now you're on steroids with your bad decisions, for example.
Of course, money amplifies,
Exactly. So what would you consider is a good next step or a good thing that for now to use that leverage you've newly acquired?
Yeah, that's very interesting. I'd say number one, follow your curiosity. And your curiosity is a nice compass because you want to be gravitating towards things you enjoy, because then you can work relentlessly and it doesn't feel like work as much as something you don't enjoy. So that's what I've done in the last couple of years, is only do things that I want to do and that I see meaning in, that I enjoy, that I know I can work long term at it. And then you also got to be smart in the vehicles you pick. And you got to pick, first of all, leverages. But second of all, it's like you got to pick the right opportunity. For example, I could be someone that starts a prop firm. I could start a prop firm, and looking historically at the prop firms, how the numbers that they do, every single prop firm does 100K in a month like that. Like so many prop firms do $1 million a month. So many prop firms do 10 million a month in revenue. The prop firm game is hot. I could also go and start a trading company about selling notepads. Just a nice, honest, physical journal. And even if I sold to every single person watching, it would never equate to the prop firm money. Now, I'm not saying I'm going to do either or encouraging either, let's say, but it's just saying understand the power of an opportunity and study, do an analysis on an opportunity and see, is this worth my time? Because no matter what opportunity I pick, I'm going to use leverage, I'm going to work hard, I'm going to deploy a team, I'm going to do all these things anyway, but I might as well do it in the best opportunity that is aligned with my curiosity. And I continue to do these assessments because as you grow older, as you have more contacts, as you have more capital, deal flow comes all the time. I get people pitching me investments all the time. Hey bro, I'm starting this company, do you want to invest? Hey bro, I got this pitch deck. Like, opportunities come all the time. Hey bro, you want to partner in this? Hey bro, let's start a prop firm together. I say no to friends all the time about that. Because you have to assess what is worthwhile, and as you get older and as you build, more and more opportunity comes. And it's that thing of from the Matrix, the girl in the red dress. The wealthiest people are the ones that have a greater ability to say no. Just like in the markets, a restricted trader is a profitable trader. Every single trader can have a winning trade. No matter if you're the chicken trader, a 1-day-old trader, a 1-year veteran, or a 10-year veteran, all of them can catch a winning trade. What defines a gambler or an unprofitable trader versus a profitable trader is the losses you don't take, because you can have a winning trade and have 5 losses in a row and give it all back, whereas a professional has 1 win, 1 loss, 1 win, 1 loss, risk reward on his side. It's controlled. The ability to say no to bad trades, the ability to say no to bad people, the ability to say no to bad opportunities or even good opportunities, to save yourself for great opportunities. And that's my trading style, exactly what we discussed at the beginning. Why didn't I take all the market plays I read? Why did I not place a trade on any of them? Because it was worth saying no, because I need to save my capital, I need to save my emotion, I need to save my everything for the great plays. And I think that's just an analogy for life.
Speaking of your trading this morning, I'm sure there's much more to it, but this made no sense to me. How you were live streaming. You live streamed your trades today. You told people these entry zones are bad because they are missing key confluences to make them valid. People still took these positions in your live stream.
God damn it, yeah.
Why do people make these mistakes?
Yeah, today I had a bit of a rant. I was like, guys, I literally live streamed and told you don't enter here. And then you're like, stop loss here. I was like, why are you here? Like, why are you trying to learn? But it's if I was in their shoes, I'd be doing the same thing. Like, it's
Why?
Immaturity in the markets. It's naivety. It's like, let me give it a shot. Let's see. It's a lot of mix of emotion. Like, a new trader is just figuring things out. Like, a baby is trying to learn how to walk or crawl. Like, they're gonna fall a bunch of times. They're gonna take a jump off a sofa that they don't know if they're gonna hurt themselves if they jump or not. So, I think you gotta touch the fire, feel it's hot to believe it's hot. And I think it's just a simple case of that. But
would you not say this is a byproduct of curiosity, which is naturally a good thing or normally a good thing?
Well, I think it's also a case of a trader is naturally very arrogant. What I mean by that is, if you got to think about it, trading, you're basically saying, I'm going to take a decision, and I'm taking this decision assuming I know more than everyone else. Because let's say you look at the stock price of an AI company, or a leading tech company, and you say, oh, I'm going to buy this stock because AI is booming and it's a great opportunity, and ChatGPT and all of this, so right now is a good buying opportunity. But the rest of the world knows that too. And that's priced in right now. So if you're buying something, if you're selling something, you're assuming I know something that others don't, to capitalize and arbitrage on that information gap. So naturally, you're very arrogant as you approach it, because you're basically saying, I know more than others. That's all that trading is. So you gotta calibrate that level of I know more than others, and the market humbles you, as they say. And I think you're just wiring in that scope. Like, okay, you're just gonna throw some bullets, realize, okay, that doesn't work. When I trade like that, it doesn't work, and eventually you get that calibration. And I think it's just early traders' behavior, that even if you have a signal in front of you, even if you have a live stream in front of you, naturally you'll mess it up a bit. You enter with the wrong lot size, you enter with the wrong place, you think you know better and enter early, or you enter late and chase it, or double. Like, there's so many things you can do wrong in the markets, and that's what makes it difficult.
Most traders, or most new traders, approach trading similar to what they approach how they approach most other things in life, of like, learn more and let's try to make as much tangible progress as possible. And they approach the most teachable things possible, which is confluences, concepts, theory, the micro, for example. These are all small things that make sense or have a specific impact or a significant impact when they're put together in a significantly or meaningful way. And some people just stop short, and they all have these small dots, pixels, but never a plan to put them together in a nice picture. The pixels remain just red, green, blue, without ever being put on a canvas. How can you encourage traders or advise traders to go from this micro obsession to an actual macro scale strategy to make use of all this confluences?
Yeah, so every trader can learn confluences, and no confluence you have is unique. Like, you've learned it from someone, and you've learned it from somewhere, and most people know about that already. And the big players know about every strategy. So there's nothing unique in the information you have. So therefore, if you're trying to build an edge in concepts, that's not an edge, because there's no secret there. There's nothing there for you. Like, everyone knows the Fibonacci, everyone knows the trend line, everyone knows all of these things. What counts is the micro, which counts is how you mix it together. The macro. What counts is the macro, because the micro is everyone can learn these little pieces of the puzzle, but how you build it together as a system is what counts. Where I can take great concepts and blow accounts consistently, because I just piece it together in the wrong way. And I can take a very simple strategy. Let me just buy every London Open when it's a bullish trend in a M15 demand. And I can have a very simple edge like that. And if I manage it in specific criterias, with specific risk management, specific profit-taking systems, all of these things, you can have an edge with simple confluences. Or if you follow that trinity and put it into any system, you'll have a positive outlook. So it's arrangement of the minutia is what makes the macro, and the macro is what will be your system. So I think a trader needs to stop obsessing over the small stuff, the small details, because there's no little secret you're going to unveil. There's no little hidden edge that you have to uncover. The traders probably know enough. If they're watching this podcast, they've probably watched a bunch of YouTube videos, maybe a couple of courses. They know enough. Put a full stop on your learning. Now it's how you build it together. And that's the difference between people that know things and people that make money. It's how you put it together. That's the only thing that counts. Systems in the market is the only thing that counts.
It's the path of least resistance. It's much easier to learn a new confluence or a new theory. You just watch a presentation or YouTube video.
Blame your psychology or whatever
else.
Yeah.
Just whatever is least difficult or least painful. That's kind of how people navigate. How would you make learning macro less painful or less resistive?
I think having a mentor is like the best thing, and there's no shame in it. And I don't know why people resist it. I know why, because of the social media game and bad mentors. But like a mentor, there's a million and one benefits. And even at my stage now, I have mentors right now. Not for trading, but for a bunch of things. And I think it's important, because a mentor is going to shorten your learning curve, guide you along the right path, not give you the traumas and make the whole journey a lot harder. Therefore, you don't have to put as much sacrifice. Like, the opportunity cost of learning things faster and making money faster, and therefore compounding faster. Like, there's not a single negative of having a mentor, apart from the fact that you just don't believe everything they say and take it as gospel. Learn enough from your mentor until you grow to their level, and then know when to get a new mentor, or know when to just find your own identity. But if you can it's a form of leverage. Like I can either go and spend 10 years figuring out how to trade, or if I could pay Ray Dalio 20 grand, I would pay him 20 grand to just pick his brains. Obviously I can't access him for 20 grand, but the point is there. Like if you can learn from someone who's mastered it for money, and if you like, why would you not? If you've got the resources for it, that's the only way you're going to grow. And instead of growing incrementally, something we've spoken about, there is benefits in growing in exponential leaps and bounds, and I think that's the way you have to approach growth and learning. You can't just take baby steps, because baby steps work, but there's also a lot of things pulling you down, and a lot of reasons to give up, and a lot of reasons that it can just go wrong. So if you're growing with leaps and bounds, you're bypassing all of these hardships. Your journey is getting faster. You're compounding your growth. You're having dopamine reward, which is keeping you motivated. There's so many wins. There's so much success is unlocked in leaps and bounds. What is leaps and bounds? Go to a mastermind. Go and join a community with traders that are funded, and just be around them. Talk to them. I don't know, play Call of Duty. If you're around right people, if you're around the right environment, if you have great knowledge, if you have great conversations, you will learn so much faster than just isolating yourself in your bedroom and trying to crack the markets. Leaps and bounds is the best way to grow, and anyone in this day and age who has $100 million net worth, every single one of them has mentors right now, and has had mentors for years and years in every domain. Like if I want to learn something new, I'm not going to go and figure it out from scratch anymore. Like when we started the podcast, I got a mastermind right away. Like right away, mastermind. I want to learn how to do this. Everything we do, yourself too. Like you want to learn color grading? Buy a course. Like why would you try and figure it out alone? Why not learn from someone who's doing it? Now, the caveat is you got to learn from someone that actually knows what they're doing, that has some sort of receipts, that is living the life you want to live, that is proven and is doing things in the way you want to do it. Like that nuance, of course, is there. But there's ways to clarify that. You know, do they teach other people? Are those other people successful? Do they have a track record? Do they have any proof of trading? Like you can go through that due diligence process, but if you have done that due diligence, get a mentor. It's going to save you all the hardship that you're going to go through as a trader doing it alone.
How would people go about accessing a mentor? I mean, communities and so forth are much more accessible. You can just find them pretty much anywhere, but mentor is something that's, I would say, a bit less accessible, no?
I mean, this is life, but you got to pay to play. Like, it's just simply like that. Like, I never got a mentor for free.
Yeah.
You got to pay people for their time. Like, that's how the world operates. Just like this villa, I'm paying the owner of this villa to be here.
Yeah.
Just like the equipment, we buy it off someone. Like, it's pay to play. It's how the world is. You can't expect to just get free stuff from someone, especially if it's of value. Because why would they give something valuable for free? Why would they give their time away for free? Respect their time, and also understand what they want. Like if it's not a mentor that is willing to exchange it with money, people message me all the time like, hey Waqar, I'll do this for free. Hey Waqar, let me just work for you for free. Well, I don't know what level you're at. I don't know who you are, so I can't just trust you because I'm taking a risk and giving you a shot. Same therefore applies if I just texted a great hedge fund man and say, hey man, trust me, I'm good, like give me a shot, I just want to be around you, I'll make coffee for you. But then he's gonna be thinking, yeah, but you might bother me, you might annoy me, you might distract me, like there's more negatives for me. So it's pay to play, and if you can't pay to play, then you got to find creative ways, and one of them for me is the podcast. Like I have an excuse to make content and have conversations with great people and ask the questions I want to ask. So I'm learning in this domain. But there's other ways, like join various types of clubs. I'm going to speak at a high level here, but it's either pay to play or play the expensive way, which is if you get into the watch brands. For example, I'm buying all these APs. I have a relationship with the brand now. They invite me to events. I'm doing Christmas dinners with other AP clients. I'm flying to Switzerland with other AP clients. I'm doing trips with other AP clients. I'm going to a Real Madrid game with other AP clients. I'm networking in that environment. Go to a local golf club and get a membership there. Get a membership. Like these membership clubs exist, and it can be the online version of it. But if you can't pay to play, you gotta have pay or find ways to have proximity, and that's harder. You can't just hang around in a restaurant and hope someone's gonna network with you. So the only way is just pay to play. Find someone, see what their time is worth. What are they asking for, and then find a way. If it's worthwhile for you, I think it will always be worthwhile, because I'm yet to have a negative ROI on a learning experience. Like I learn it, and either I learn what not to do, or I learn what to do, and I move forward with that information. So it's only positive towards that.
From the macro of trading to the macro of finance, where does trading fit in as a micro in that big sphere of finance in general?
No, finance is a much broader topic, like financial literacy and approaching life. I see traders that are making payouts mess it all up. Like if you've just got a payout of 10 grand or 50 grand this year, and you've spent 80% of that, you've done it all wrong. Like there is a system to follow, and it's tough because you're not taught it, and you can't ask your parents, or you have to learn it from the right sources. But wealth creation is not a mystery. Like wealth creation, surprisingly, is a very specific plan, like a very specific route with very specific things. It's just you gotta learn about it, which is hard, and then you gotta follow it, which is also hard, because when you start making money as a young man, status games take over your mind. You want to get the rollie, you want to flex, social media eats you up. Ego is something every man has, because it starts off with low self-esteem, low self-confidence, then you make it finally. Now you want to be proud of that naturally, and social media can be a void of that. The people around you and impressing them can be a void of that. So financial literacy is a big topic. But the way I look at it is, I think a nice goal for everyone to have. Limiting beliefs will tell you it's not achievable, but I think it's achievable for anyone. If you can have $2 million cash in a portfolio at some point in your life, it doesn't have to be next year, in a decade, in 2 decades, in 3 decades, if you can reach that point, money will never be an issue for you, because you could put that $2 million into an investment vehicle, something simple. Bonds, the stock market, property. I'd probably say property is the best, because you have capital appreciation and rental yield, 5, 6, 7% a year. You do the maths, that's 10k a month. You can do 10k a month passively for the rest of your life, as long as you can find a way to get $2 million. That's not a massive goal. I'm not talking $50 million or revolutionizing industry. Like, slowly chip away. Take your time. Learn to save. Learn to compound wealth. Learn to learn faster. Learn to learn effectively. Keep chipping away at it. $2 million is not as big as people may think. And if I heard this 10 years ago, I'd be like, $2 million. But if I become a dentist and I earn 100 grand a year, and then 50k is tax, and then rent, and then I might save 10k a year, I have to do that for how many years? It's not happening. It's not happening. I can't do it.
Yeah.
Yes, because time for money, jobs is not the way. That's a stepping stone. And then you got to build from that, and then learn leverage, learn life, learn wealth creation, and then follow that plan.
I like these chats. It's always very enjoyable. And
with the monkeys and whatever else are in the background.
Yeah, this time is a bit hard mode, but it was always enjoyable, bro. I look forward to the next one already.
Beautiful.